My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey gang, welcome back. Today I've got an old friend on Zoom with me, Gary Ma. Gary and I have known each other for, probably 20 years now, Gary. You don't look like you've aged a bit, but I sure as hell have. Anyhow, Gary is a very, very accomplished real estate investor, real estate entrepreneur, definitely a take action kind of guy. I've been keeping an eye on Gary and what he's up to in apartment building investing, multifamily investing over the last couple of decades, and he's done some really amazing things. So zooming in from lovely Edmonton, Alberta, welcome, Gary Ma. Good to see you, my friend.
Yeah, thank you, Dave. Thank you, Dave.
All right, Gary. So give us a little snapshot right now, as of the time we're recording this. What does your real estate portfolio consist of?
Yeah, so it consists of 4 multifamily buildings, minimum 24 unit buildings. So we have a 24 unit building. We have a 33 unit one. We also have a 42 unit and a 63 unit building. And then we have a smattering of smaller up-down suited houses and things like that.
Okay, very good. So my math isn't that great, man. How many rental units do you have in the portfolio total at this point?
I guess when I total it all up, it's about 175 units.
Wow, that's impressive. Congratulations, my friend.
Thank you.
I think when I first met you, you were at 0. So
yeah, exactly.
You've done some pretty amazing things. So Gary, for folks who aren't super familiar with real estate and real estate investing, maybe paint us the picture of what appeals to you about this kind of investment, this investment class versus stocks, bonds, gold, crypto, everything and anything else that's out there. Why do you like real estate so much?
Yeah, I like real estate a lot, like a lot, because it really produces cash flow for me. Okay. Mm-hmm. And we own multifamily buildings, and it's generating very, very decent cash flow.
So again, for folks that aren't familiar, cash flow is the profit at the end of the month, the jingle in your jeans that's left over after you've received all of your rents from your tenants, you've paid all of your expenses, including mortgages and property taxes and repairs and all that kind of stuff. What's left over is the profit. That's the cash flow, right, Gary?
Exactly. Yeah. So I mean, from that profit, it comes to myself and my partners, and really that cash flow supports my life and lifestyle. Nice. And so what it allows me is really time freedom. I mean, it's been incredible to really, do things that I haven't been able to do. Like we went on a trip to Japan earlier this year. And, if I was working, 9 to 5, I could probably fit that in. But, when we were in Japan, we were still working on deals and stuff like that. So it was very, very cool.
So what was your job before you got enough cash flow from your portfolio to focus on this full time?
Yeah. So I used to be a professional structural engineer.
Okay.
And I was working, I was getting paid very well. Mm-hmm. And I was working on the heavy industrial side through working in refineries, oil sands plants, mining facilities.
Right.
And yeah, so that's really my background.
So you're definitely an analytical kind of guy, an engineer by trade. So that is great. And okay, so we've talked about the time freedom, the financial freedom that real estate has created for you. Now, there's a whole bunch of different ways to invest in real estate. A lot of people have probably watched shows about flip this house, flip that house, that kind of stuff. That's the kind of the sexy stuff to watch on TV. And then there's things like, investing in big commercial properties, or investing in land, or investing in mobile home parks, or flex industrial spaces. You're focused more on multifamily or apartment buildings. Why do you like that kind of real estate investing versus others?
Right. Yeah. So with multifamily apartment buildings, people need a place to live. And they really pay the rent, and from that rent they pay the mortgage and all that other stuff that goes along with operating an apartment building. Also, right now, CMHC has a program where you can get up to 95% financing on it.
So CMHC, for folks that aren't familiar with that, is Canada Mortgage and Housing Corporation, correct?
Right. Yeah, exactly.
The big lenders for guys like you that are buying apartment buildings.
Yeah.
So repeat what you just said there. They finance up to how much?
95%. So basically with 5% down.
Well, so again, for some people, they might be saying, well, that's no big deal. I bought my house for 5% down. What's the big deal? So maybe explain why that is really a big deal.
Yeah. So let's say, for instance, you're buying a $4 million property. Okay. And 5% down on that is $200,000. So very reasonable amount.
Yeah, $200,000. When we think of $4 million property, could very well be how many units for the kind of property that you're looking at? How many rental units?
Well, that would be roughly about 42 units.
Yeah, 42 units. So you can buy a 42 unit apartment building with just $200,000 out of pocket.
Yeah.
Wow, that's pretty amazing. What would it be normally without this CMHC thing?
Right. So typically it's going to be about 25 to 30% down payment.
Wow. Okay.
Yeah.
So instead of being $200,000, it would be closer to 1.5 million kind of thing, something along those lines.
Somewhere in there.
Yeah, that's a big difference. Okay.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com.
Yeah, all right, that's appealing. But if you don't put hardly any money down, doesn't that mean that your mortgage is going to be huge and it's going to be difficult for that to cash flow?
Well, yes, the mortgage is huge, okay, but not every property will qualify. So it has to meet certain criteria from CMHC that it has to have the right minimum debt coverage ratio, which means that the net operating income, so the income minus the expenses, the net operating income is greater than the mortgage payments.
Oh, yeah. So they make sure that it's profitable. They won't lend to you unless the property is going to make money.
Exactly.
Okay, well, that's good.
Exactly.
Okay, so you like apartment buildings because it's a need, it's a human necessity, shelter's a human necessity. Financing's pretty sexy these days with the CMHC stuff going on. Why else? What else do you like?
Well, okay, so let's go back to this 42 unit building, okay?
Sure.
So in Alberta, we can raise rents any amount once a year, okay?
That's a big deal.
It is.
For folks that aren't familiar with that, I think you're the only province in the country where you can raise rents like that. Everywhere else has rental controls, I believe.
Very similar. I think Saskatchewan might be similar to Alberta, but Alberta is very good.
Yeah.
Okay. So for instance, if we were to raise the rent $100 on 40 units, right? And in a small community where the cap rate is 6%, let's say, okay, that property value goes up by over $800,000.
Wow. By increasing the rent, how much?
$100.
$100 per unit.
Per unit.
So folks might be thinking, well, okay, that sounds good, but doesn't that make you one of those scuzzy landlords that's just sticking it to your poor little old lady tenants?
Well, like we have to operate the buildings properly to really keep and maintain and keep the tenants happy.
Yeah.
And that's, we're like good landlords. Like we don't want to be slumlords. Like we're people that, we would live in most of the buildings that, we buy type of thing. Right?
Well, the other thing that you got to remember as well is Quite often the kind of properties you're looking at are being rented at under market rents. So quite
Absolutely.
often you're really just bringing them up to market value. You're not gouging anybody. You're just charging them what they should be charged in the first place.
That's right. That's right. And what the CMHC program, it allows us to get into those type of scenarios.
Yeah. Okay. Very good. So there's those opportunities there. So you're providing a need. There's great financing on this. There's ways that you can, increase the value of the property. You mentioned early on, one of the things you love about apartment buildings is this ability to create cash flow,
Yes.
which you and your investor partners enjoy. So what are some of the big benefits for your partners, your investors who come along for the ride with you?
So for my partners, it really is a passive investment. So they don't have to deal with the tenants, toilets, look for all the lenders, arrange things, get all the due diligence reports. It is a lot of work. Like, for instance, on one building, we had to spend an extra $20,000 to get a report saying,
just to get a report.
Just to get a report.
Yeah.
Right. So we do all the heavy lifting. We meet with the sellers. We meet with the mortgage brokers, arranged with the lawyers. So it really is hands-free type investment.
Yeah. And then once you own the property, you guys take care of the management. You're in charge of all of that, repairs.
That's right.
Et cetera, et cetera.
Yeah.
Very, very cool. So Gary, you've done a number of deals over the years. What's your favorite deal that you've done to date? Tell us the story.
Favorite deal. Yeah. So, we just closed on a building in June. Just a few months.
June of 2025?
Yeah. So it was a 63-unit building. And
where was it located?
It's in White Court.
Okay.
And it's about 10 years old.
So not very old.
Not very old. Yeah. And right now we're getting more than double the cash flow that we anticipated.
Why is that?
Why?
How did you do that?
Yeah. So okay. So the interest rate that we got was lower than what we anticipated.
Oh, okay. That makes a huge difference.
The repairs and maintenance is lower than what we underwrote. Because CMHC has a certain formula for that. They have an appliance allowance, and we're not using all of that. And our vacancy, we converted an office into a suite. Okay,
you added another rental unit there.
Yeah. So all of that comes back to us as cash flow.
Very nice.
Yeah.
What kind of a difference has that made in the bottom line for your investor in the deal or your investors?
Yeah, I mean, we're basically passing that on to the investors. Like if we're making double, we're passing that on to the investor as well.
Yeah. So what kind of difference has that made in the value of that property?
Well, like I say, okay, like this is even more units, 63 versus the 42. So the property value, goes up probably closer to like $1 million.
Wow. Right. So what did you buy the property for?
Well, okay. So we bought it for $10.5 million.
Okay.
Okay. With 5% down and that. So, around $600,000. Yeah.
Wow. For a $10 million building. That's great. Now you had to put some money aside, I'm sure, for repairs and all of that kind of stuff as well. Right. So
yeah, absolutely. Yeah. So, I mean, it's been phenomenal. Like this building is really performing way better than I anticipated.
Very nice. So moving ahead, what plans do you have in store for your real estate investing business for the next few years?
Yeah, like we're continuing to grow, and we're looking right now at a 96-unit building here in Edmonton. We're looking at a 48-unit in Saskatoon. There's other opportunities where we're looking at creating new developments as well. So, lots of things on the books, and, deals come by all the time.
Interesting. Very, very good. And congratulations. You've, at the time of recording this, just started your own podcast, True North Success. Tell us a little bit about your show.
Yeah, so we're it's a new podcast, and we're interviewing successful people, and we want to get some insights on what they're doing, so that we can share that with our listeners and that. So it's an awesome way to meet other people.
Yeah, it's wonderful. Well, congratulations. And if people want to connect with you, Gary, and find out more about you and your deals and maybe have a chat, where should they go?
Yeah, so I'm on Facebook, I'm on Instagram, I'm on LinkedIn. Okay. And I'm also a multifamily real estate agent. So if they can Google me on there, so they can certainly find me in various places.
Gary Ma, the real estate guy based out of Edmonton, probably the only one, and with this good looking face. So yeah, probably LinkedIn's probably a good place to connect with you, I would imagine.
Yeah, absolutely.
Fantastic. Hey, Gary, congratulations. This has been great. Keep up the good work.
All right. Thank you so much, David.
All right, everybody, take care, and we will talk to you on the next one.
Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.